Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we're going to be taking a look at Electronic Arts stock, ticker EA. This one came in by request down in the comments section of one of my other videos. If you have a stock you'd like me to take a look at, just put it down in the comments. If it's in the S&P 500 like Electronics Arts is, I'll post those on YouTube for free. The rest I post over on Patreon at the $5 a month tier level. You can request whatever stock you'd like over there. Sometimes I just answer in the comments and tell you what I think about it. Other times, if you want a video, you let me know. I can make a video too. As always, this is not individual investing advice. This is just how I analyze stocks. This Electronics Arts stock, that's a little trickier to say than you might think, is going to be a little different than some of my other videos, but it might also be a useful example of when I think something's just a little bit too hard. So it's even though it's a good company and everything, there are some unpredictable things that I see in the past that kind of leads me to have a difficult time. And then just knowing what business they're in, they make like games, like console video games. So the first thing I look at is the historical earnings, which is this dark green area here on the fast graph. And when you go back in time, what I want to usually see is how cyclical earnings have been in the past. Well, when I go back to this 2008 period, obviously we had a recession. So, and the decline in 2009 and 10 definitely occurred during that time. So that could have been the main reason why they actually had totally negative earnings. They lost money in 2009. But they were kind of weak going in there, at least earnings wise. The stock price kind of stayed the same as it was. Let's see what basic earnings look like too. So they even look worse, right? But then we get this recovery and basic earnings kind of leveled off. Adjusted earnings slowly rose over time. So more recently, this looks really pretty decent. But there's always this risk that we want to know how economically sensitive this business might be, because if let's say you go back in time and you're estimating earnings back in 2005 and it has this nice kind of chart like it has now over here, and you assume that they're going to grow like that the entire time, well, these down years during these down cycles can completely wipe that out. Like if you bought in 2004, you wouldn't have made any money for 10 years, right? So this is the risk that I think is in a stock like this. Now, some of this could have been because of the recession, but some of it also could just be the type of what games are popular, what sort of gaming cycle is there, like what's going on. And even though the adjusted earnings look pretty good recently, we have about, if you just use the fast graph, it's like 10% growth. Well, that takes these next couple of years. Let's shorten this to real time. Yeah, still about 10%. So 10% earnings growth, just looking at it. I didn't check their buybacks or anything. And we have a 19, almost a 20 PE. That's about a 2 PEG ratio. That's about where the rest of the market is right now. So it's trading pretty similar to the rest of the market. But we do see that, when it gets a little overvalued, like here in 2018, the stock can fall like 50% rather quickly. And I don't know if that was anticipating the weakness this next year or what. So I think it's pretty hard to do a valuation on it, because we don't really know what competition in the games is going to look like over the long term. We also don't know what will happen if we have a recession and people just don't buy games for a couple years. So I just decided to kind of lay off this one. Now, I did buy Activision a few years ago when it took a big dip before it got bought out, and I did fine on that. So it's not that I'm like completely against buying like gaming stock. I also own Nintendo actually too, that I've had for several years now. But they're just a little bit. I just can see with the history that I know that risk is there. And I think it's a little hard to predict. Now, if it got super cheap, it got down to a 15 PE here. If it got down to like a 12 or a 10, and I knew there was some event that they were dealing with that they would probably be able to bounce back from, then I might be kind of tempted to take a chance and like come in. But right now it looks like it's pretty much valued the same way as the rest of the market. Not super cheap, maybe not super expensive either. We could use the normal PE, which is like a mean reversion. So we can say, well, in recent years, what has the market treated this stock like? And if you go forward a couple years, if they do what analysts think, you could see kind of what your returns might be. So maybe you get 15% a year, which is pretty good if all goes well. And it reverts to the mean a little bit more. You can also go another year if you want. About the same, right? So that's a good return. But the risk is like something doesn't work and that doesn't happen. And then the question is, how far could the stock fall? And in the past, we've seen that the market is definitely willing to punish the stock quite a bit. This decline back in 2008 was like 75% or something. I'm not even going to pick the exact bottom, but yeah, like 75%. So it's probably more like 80. So these are big declines that are potentially there, and I don't really feel like I have a way to predict that. And then just big picture, I mean, when I look at like the games that my kids are playing, it's like Roblox and Minecraft and Nintendo to some degree, or Fortnite or something. Like, so there's just so much competition for time, or they're just on freaking TikTok or something. So I just don't have a ton of confidence that the bottom couldn't kind of fall out if I was just buying this during normal times, which is in paying, a normal price, which I think right now is pretty much a normal price. So that's my thoughts on Electronic Arts. I have it in my spreadsheet. It's just kind of in the too hard category for me. I might be tempted if it got like super cheap for some reason, but I'm probably just going to lay off. Try to find something that's that I think is a little bit more predictable, especially if there's a downturn. Either a downturn for them, their business, or a downturn in the wider economy, or in 2008 it looked like they had both. So, and I'm not attuned enough to really know when those are coming, right? So for me, I just kind of put this one off to the side. All right, hopefully that helps a little bit, even though I didn't have my standard valuation. If you found this useful, hit the subscribe button, hit the like button. I'll see everybody later. Bye.